All right, all right. Welcome back to the Inspired Idiot Show. Welcome Greg Cook to the show. He's on with us today. How are you today, Greg?
Very well, thank you.
Well, I'll kind of just jump right into why I wanted to have you on the show. You are the CEO of a credit union with over $100 million in assets. So I want to kind of step back and get you to explain, if you had to explain to a sixth grader what you do, what do you think you would say?
Credit unions help the common person. We're in business to help our members. So a lot of people don't understand the difference between a credit union and a bank. So banks are owned by their stockholders, and credit unions, being a not-for-profit organization and a co-op, we're actually owned by our members. So if you joined the credit union, you would be having one share in the credit union. So it doesn't matter if you have $5 in the credit union or $5 million in the credit union. It's one share, one member, one vote. And we're in business to provide services to our members. And when I say that, it's because we can offer lower interest rates, lower fees to our members, because we're not in business to make huge amount of profits to send to our shareholders, because we don't have shareholders. We have members. And so our primary business is to provide services to our members. And we do that not just with lower fees and lower rates, but we bring on different benefits for our members with like financial literacy tools, different workshops that we do to explain finances, budgeting, credit scores, debt ratios, how all those things impact people. And we have services in place to help our members. As an example, we have a credit builder program. Years ago, when I first got out of the United States Marine Corps, I had no credit. And, I couldn't walk into any bank to do banking until I established credit. And I was fortunately a member of the credit union and took out exactly what I'm sharing with you now, a credit builder loan program. And so I was able to get my credit established. And then over time, I've had plenty of credit. But just to give you an example with rates and what I mean by that, a typical, credit card rate. I normally mention their names, but since this is going to be on a podcast and I don't need any issues, a typical credit card company is going to charge like 29.99%. We have a couple different tiers depending on your credit score, but even our lowest tier with credit rates, it's going to be half. 14.99 is our highest rate. So even if you don't have, the perfect credit, you're still going to have a much more attractive rate because again, you know, our whole focus is on our members. If my lights are on a motion detector, and since I was just sitting here not doing nothing, the lights went off on me. It's the one thing
Just
about
have to
going
wave your
green.
arms every now and
Yes,
then.
I kind of have to. You can't see it too much out of the camera, but you know, they say it's supposed to be good for the environment and all that kind of stuff, but it's a pain.
Gotcha. So does anybody have access to using a credit union in the same way that anybody could go start an account at a bank? Or are there more like stipulations in who can use a credit union?
That's a great question. There's different types of charters, and most credit unions were established with one type of charter. As an example, ours, we have what's called a SEG, a Select Employer Group. So we work with an organization. There's open and closed credit unions as well. So if there's a credit union in your area, you just need to see what the qualifications for membership is. We're a closed credit union, so not everybody can easily be a member of the credit union. But sometimes there's ways around that. For an example, like an association, some credit unions are aligned with an association, so you might not be an employee of a particular company that allows you in, but by being a member of an association might allow you. Most credit unions will allow immediate family members to join as well. So like mom, dad, brother, sister, son, daughter, they might not work at that company, but since their mom's a member of the credit union, they can join the credit union.
Now, this was something this might be a bit of a dumb question, but that is kind of what I like to do
There's
here.
there's no
And
dumb
and I
question.
Okay, good. I believe that as well. But I wanted to be specific about this because I noticed, like, when I first asked you to kind of explain what you did, you specifically said the credit union that you work for has $100 million in assets. Now, I wanted to understand when you say it has $100 million in assets, is that the same as the company being valued at $100 million, or what is the distinction there?
So we have members that have accounts with us. Our assets would be anything that we have in regarding to investments and loans on our books. So if you were to come in and you joined the credit union, and let's say we gave you a $100,000 home equity line of credit, as an example, that home equity line of credit then would be on our books as an asset.
Okay,
So
okay. So it includes all of your clients' basically investments and stuff with you.
yes, all of the investments and loans that we have, when you tally that up, actually crossed the hundred. We crossed the 100 million mark this year. Every month we go through our financials, and we actually went a couple years ago when I first started. I think January of 23, we were around 91 million. Uh, when I was first hired in November of 23, we were at 93.5 million. And then it went down a couple million. Obviously, if, for an example, let's say you were buying a business and you withdrew $1 million from the credit union, then our asset size would, go down based on assets coming in and out of the.
Okay, that makes more sense. So, can you kind of take me back to, I guess, what made you want to pursue a career in finance?
That's going to take you back a long ways. But I can tell you the first time I got interested in learning about this kind of stuff, I was actually in the Marines. And a friend of my mom who was a financial planner, had suggested I, look into starting up like an IRA retirement account, and sent me some information. And it basically showed if I were to save $2,000 a year over you know, the course of my lifetime, I could literally have $1 million saved up in these investments. They were touting mutual funds and things like that, but it kind of sparked my interest. Matter of fact, I literally remember talking to a buddy of mine, a fellow Marine. I said, "Look at this. You can save this up and have $1 million." He's like, "Oh, that's a scam." So here I am talking to my mom, going, "You might want to watch this. I don't know if this is legitimate or not," but because a lot of us don't grow up learning a lot of financial information, a compound interest, mutual funds, different types of investments, things like that. And so that kind of really sparked my interest. So when I got out of the Marines, I initially got my degree in financial management, because that kind of was the path that I was taking to learning that kind of stuff.
Okay, okay. So, I definitely relate to that. I feel like especially since getting into business, I've had a lot of moments where I thought to myself like this seems like it would have been a very very valuable skill to learn like in school, like financial literacy. And I think a lot of people depend on learning good financial habits from the people around them, but if the people
Right.
around you
If they
never
don't
learned
have.
good financial habits.
Exactly. That's one of the things, and you kind of come across different people basically saying, look, if your parents aren't where you want to be, they might not have been the best ones to teach you some of these things. And so you need to go out and find some coaches. I actually was talking within the last 2 or 3 weeks with a author who wrote a book for financial literacy targeting teens, like late teens, early 20s type of people. And I mean, she has a really in-depth book, and I found it interesting. Probably a lot of younger people might not be interested in it, but I do think younger people are more interested in learning things, especially with crypto and a lot of different stuff that's come out. It seems like people are more interested in it than, when I was younger.
Yeah, yeah, I would agree with that, especially now because so many people are, working from home or starting online businesses. I think if you are somebody that likes the idea of building a business or making money for yourself, you kind of inherently become interested in learning like how does money work? What are some things I'm doing that are maybe not good money habits? But I also wanted to get your thoughts on something because I've found since getting into business, I found that there are many people that kind of have this belief that people who work in finance are kind of similar to people who work in sales in that they're not necessarily bad people, but they are very like profit over people. Is that something that you have experienced, or what are your thoughts on that stereotype?
I would say you're going to have that, in any walk of life, you're always going to have a percentage of people that are looking at things from certain lenses or certain angles. But from the credit union standpoint, that's one of the really things that make us different. We don't earn commissions or anything like that. If a person walks in here and was to open up like an IRA, for an example, if there's, stockbroker firms, you would hope that the majority of advisors would look for the best interest of their client, but sometimes I think some of the rules that are out there today, because they didn't, they looked for, this particular mutual fund or that particular annuity paid higher commissions, so they might steer them in certain directions. Well, we don't have any of that kind of thing in the credit union. The mantra, and I literally see this or hear it almost on a daily basis, but the mantra in the credit union space is people helping people. And literally, it's a different kind of a world in the credit union space because we're looking for the benefit of our members. And it's even true with the leaders of the credit union space. I've had conversations with CEOs of other credit unions, what they're doing to better serve their members, things that they're doing to better serve their organization. A couple of years ago when I first got here, the two biggest things that I had on my plate that are still on my plate is finding ways to increase revenue for the institution, and while at the same time offering and finding services to be able to be a benefit to our members. And so that's a little bit different of a take that you get in other industries because they're looking for how can they increase their profits, their bonuses, things like that. So it is a complete different outlook on how we run our businesses.
Yeah, yeah. I think you hit on a good point there. I'm even thinking about my own experience with the bank that I bank with and have been with for a very long time. I cannot even tell you how many emails I get from them saying, we're giving you a credit increase or, open up this line of credit or we have this new credit card. And the thought that always kind of comes in the back of my mind is like, I always have the feeling that it's more of a benefit to them than it is to me. And I think a lot of people have that perception of banks specifically. I can't speak to credit unions.
Yeah, and I've had the conversation with executives at different institutions. And, as I was sharing with you, the people helping people type of thing with our members, I've had very open communications with executives from other credit unions that I don't think you would find at other financial institutions. For example, I don't think the CEO at one large, banking organization can have a very open conversation with the CEO of another banking organization on things that they're doing to help their institutions, where we have very good communications, dialogue. Collaboration is probably the biggest word that's thrown around in the credit union space is collaboration. And so I get kind of used to that. As an example, if I'm talking even with somebody outside of the credit union space, hey, what kind of software do you use on this or how do you do that? And some people are kind of guarded with what they're doing or how they're doing something, while other people are very free flowing, with information. It's like, oh, well, I use this and, that's how I do that. And so even outside of, my industry, I'm that type of a person, which I think is why I aligned very well in this industry because I've had people ask me something even in other industries and they'll be like, "Well, why would you tell me that? That seems kind of like I don't think I would tell my competitor that or something like that." And in another space I was in, I literally had somebody that worked at a different company that asked me some stuff and I shared with them, like, "Why would you do that?" But see, I don't live in a scarcity mindset though either. There are people that live in abundance mindsets, I'm where I'm supposed to be. And, whatever somebody else is doing, they've got their own path. So whatever they're going to do is going to have no effect on me. I wish everybody success because there's plenty of abundance to go around in the world.
Yeah. I resonate with that a lot. That is a big motivator for why I actually do this content because like I was saying to you before we hopped on the call, I think when it comes to business and obviously in finances there are certain things that do need to be kept confidential. But I think in business
Sure.
in general, there is a lot of kind of smoke and mirrors and there's a lot of like, oh, we don't talk about that or particularly in the space of like online creators, I've noticed there are a lot of people that will say this is how I make money, but how they actually make money is a little bit more like behind the curtains. And I think that is what you just described is very aligned with how I want to do business and how I want to create content is from a very transparent place of like, hey, this is what worked for me and I want to share it because their success is not to be hoarded, I don't think. And I think if there's something that I'm doing in my business that I feel like I need to hide from people, then there's probably a better way to do it.
I would agree. We've got a same kind of thought process mindset because if you're a hoarder, whether it's your secrets or your information or how you're doing something, you're not free flowing. And so I think when you have that more of a, for lack of a better term, collaboration, when there's ideas flowing back and forth, that's how everybody gets better.
Yeah. Yeah, exactly. So going back to the topic of like credit unions and banks and stuff, what do you think is a very common misunderstanding people have about credit unions?
Well, sometimes people don't really realize what a credit union is. I mean, the industry's been around for decades. When credit unions first started, it was because the common person had a hard time getting banking relationships. Kind of the old ugly truth on the banking side of things is usually they catered more towards the wealthy people. 100 plus years ago when the credit union movement really got strong was because there was a need for people to be able to have some type of banking services, whether it was loans or whatever the case might be, had a hard time dealing with the banks. Clearly, it's a lot easier now, and the banking industry has changed and grown. But the need for credit unions is still there. I mean, we have people that might have a little bit marginal credit, and you know I was at a lending conference that was geared towards credit unions, and it says, everybody pays somebody. And so if you can look at a track record, how have they paid your credit union? They might have some problems, but there are people that come, hell or high water, they're going to make sure that they pay their credit union because they knew the credit union was there for them when they needed them. The only types of things out there are higher interest rate finance companies, questionable terms that they've had. And so you find credit unions being fair to their members.
Yeah. Yeah. I would say, I mean, I could totally see that maybe many, many years ago, banks were a little bit exclusive to higher class people. But I think today, I mean, banks and consumer debt and credit cards, it's super accessible to anybody. So if anything, I think we've probably gone in the opposite direction where it's people have access to debt basically more so than they ever have. So
And
that
that's
actually
where
got me
the,
thinking.
I
Go
was
ahead.
just going to say, and that's where some of the financial literacy tools that we share with our members on how a lot of times people, they walk into like a car dealership and I literally just talked with a member a little bit ago who um, they went into a car dealership to buy a car, and they had someone said at the dealership, don't tell them I told you this, but you could probably get a better deal at the credit union. And and that's when they got their first car loan with us because they were within the same organization, so they had that common bond there. But typically, when someone walks into a car dealership, they're not thinking bank or credit union. They're thinking, I'm going to buy, whatever car or truck they're looking at. And when they're sitting down with the guy, they're not really going over interest rates and things like that. They just say, well, your payment's going to be this. Can you afford that payment? And so a lot of times we end up refinancing car loans with our members that had a much higher interest rate, because the banks or finance companies that are shuffling a lot of the car loans out there compensate the car dealers. Don't take this wrong. I mean, profit for organizations is not a bad word, but sometimes they might be steering people into a car loan because they're getting a rebate back to the dealership. And again, I work with lots of car dealers that our members buy cars from. So the number one thing we pitch to our members is, come into the credit union, we'll get you pre-approved. You can walk in there, you know what your payment's going to be, and don't have to worry about the financing. Um, you know, whatever you're buying, whether it's a house or a car, when you're buying big ticket items, it kind of makes sense to be prudent with what your interest rates are versus, you know, w- the the payment. In some of those cases, they're selling you on what your payment is going to be, not even realizing what your interest is.
Yeah, yeah. It goes back to what you said before about, having some financial literacy, because I think that's where what I've experienced, at least, that is where a lot of the kind of distrust is between people and banks, is that you always assume, like, okay, is this a good deal for me though, or is this a good deal for the creditor
The
or the bank and
institution,
what they're going to get out of
right?
it? And I mean, even like in my situation now, my husband and I are working on building our home, and we are fully intending to do it without using a bank. And it's going to be an interesting process, but a big part of the reason for that is because I just have this idea that, especially when it comes to very long term loans like mortgages, it is what most people do because it's what most people do. But I think in the end, the bank wins. I mean, you win, of course, as the person who now has a house. But when I think about how much extra money goes in towards paying the bank for that loan, we've kind of thought, well, what if we do it differently? And it's a very big undertaking. But I think that's where a lot of people's kind of skepticism comes in when it comes to banks loaning them money or financing or whatever. It's like, yes, I guess at the end of the day, I do win because I get the thing out of it that I'm coming to you for the loan for. But I think a lot of people have this perception that the bank is always going to make sure that the bank wins, right?
Yeah, and you hear a lot of the gurus out there talking about, good debt versus bad debt, and I would agree. I would tell my children, the best thing would be to not be in a debt type of situation. Bad debt would be like credit cards, car loans, mortgages, things that you're buying for your personal self. Good debt would be you're buying a company, you're buying equipment for your business. You need to make those investments. So you're borrowing money, but those things are going to give you a return, whether you're buying an investment property. So a mortgage on a house, a lot of the gurus would tell you that's a bad debt. A mortgage on an
Mhm.
apartment building that's going to generate you income, they would say that that's good debt. So a lot of the gurus out there say there's, good types of debt and bad types of debt. But,
Mhm.
from a financial literacy standpoint, I agree with the ones that say you should probably not be in a lot of personal debt. That's, that's investments in your business or in yourself that's hopefully going to give you a return.
Yeah. Yeah. So are credit unions then considered nonprofits?
So I don't know how the laws are in Canada, but in America, there's nonprofits that are 501c3s, and there's also other types of organizations that are not for profit. So the credit union is a not for profit organization. So we're not in business to have large, profits, if you will. For tax status, we are considered a not for profit.
Okay. So how does that work then? Like, if you were trying to explain this to somebody that was, not super business savvy, how do you explain, how does a not for profit actually make money then and like pay employees and stuff? How does that work?
So we do have revenues. As I shared with you, one of the two big things I was looking at is finding ways to increase our revenues. Those revenue streams are from a few different areas. It would be interest on loans that we make to our members, and it would be on interest on investments that we make that we would be getting a return on those investments, and ancillary services. So, for an example, if we're making different services available to our members, we may receive some type of compensation on that. When we're making discounted programs available to our members, we might receive some type of compensation on that. So we do have income that comes into the organization as far as revenues go. Tax treatment is so we don't have the same tax treatment, which is one of the reasons why we can afford to have better rates and fees for our members as well. So not just the fact that we're not having to send profits to our shareholders because we don't have any, we have members, we do get a fair tax treatment as far as the taxes go as well.
Yeah, that makes more sense. So if you're thinking about like kind of the average person who's, maybe looking at something like a loan, let's say like a mortgage or even something like a car loan, What do you think the average person should kind of consider if they're trying to, decide between should I go with a bank, should I go with a credit union?
Well, the biggest thing would be the interest rate. The member that I was suggesting they refinance their car loan, they had very good credit, and the rate that they got from the financial institution through the car dealership was between 8 and 9%. And just by refinancing, they're saving thousands of dollars in getting, I don't know exactly where they're at, but around 5% interest, with us. So, we're saving them between 3 and 4% on a $70,000 vehicle.
Okay. So that would be probably the biggest thing to consider when looking at financial institutions is who is going to give you a better interest rate.
Yeah, who's going to, you know, what's your interest rate? A lot of times when people go into a car dealership, they find themselves just looking at vehicles and then they start talking payments, not even realizing that payments based on 8.5%, and they could get, 5% at their credit union, roughly speaking. And then probably two, when it comes to home loans, a lot of times mortgages get sold off at banks. Not all banks, some banks keep their mortgages, but a lot of times they'll keep them for so long, sell them off. We had one member who's refinancing with us said, with their bank, their mortgage got sold off like 5 different times. And they're like, I kind of just want it here where I can, I talk to the people when I make my payment. I know where it's at and I don't have to, where's this 800 number going to, that kind of thing. So all of our portfolio mortgages are right here. We don't sell them off. We've never sold off a mortgage.
So again, this might be kind of a bit of a newbie question, but this whole world is a little bit new to me and I've never owned a home before. So do you ever have members who maybe had existing mortgages with another financial institution that will then move that mortgage over to a credit union like you guys, or how would that
Well,
work?
yeah. Matter of fact, when rates went real low, we were experiencing a high volume of refinancing of our existing members.
Okay.
Some of them were
Interesting.
refinancing loans that they had here and got better rates because the rates were lower, but a number of them had loans like the one member I shared with you whose loan had been sold off 5 different times and then refinancing to a better rate here.
Interesting. So why do you think I'm curious to hear this from the standpoint of somebody who actually works in the financial industry. Why do you think so many people have a bit of distrust with financial institutions, even the ones who are trying to do good?
You know, Probably the whole financial literacy thing. When my kids as well. I mean, I've tried to share different things with my kids, but they don't really have a class in any schools that really teach a lot of this stuff. The different types of loans or the different types of insurances, or you know, um, that's one flaw. I'm not running for politics or anything like that, but I think a little bit of a flaw that our education system doesn't really teach that kind of stuff, which is very important life skills. And that's why we've actually partnered with a financial information company that does debt management, things like that, to provide free consultation to our members for that kind of stuff.
Yeah, I would agree with that. I think it is financial illiteracy because at the end of the day, you probably don't trust what you don't understand. The extent of financial literacy that I can remember learning about in school was learning about like very basic taxes in like consumer math class, and that was pretty much it.
And you might have gotten a little bit more up there in Canada than they get down here in America.
Well, maybe, but I actually have a contact who is the chief operating officer for a organization called Enriched Academy, and they actually launched their business on I think it was Dragon's Den or Shark Tank, but they basically are a financial literacy company up here
Okay.
in Canada. And his partner has his kind of founding story of when he was about 20 years old. He got a credit card in the mail that had a $20,000 limit on it. And he went, I think, that week and bought a new car and was like, well, I have
Uh,
this money. I have this credit card because he just didn't know any better. So
exactly.
I don't know that Canada is that much better
Well,
off in the financial literacy area.
I don't know what they taught you in the consumer, you said a consumer class, but there's not a lot of information out there. And so it is, you don't know what you don't know.
Yeah, but I think that's cool that you guys as a credit union are trying to make financial literacy more available to your members because if people do have a better understanding of how to be smart with their money, we would probably see more people actually doing things with their money and learning how to work with it as opposed to just trying to avoid it altogether, which I think is what a lot of people do.
Yeah, I would agree.
Yeah. So on that note, that was actually one of the questions I wanted to ask you. If you could change one thing about the financial system in America, what do you think you would change?
Oh my goodness. Well, I would rather there be a lot less of the speculation and the manipulation. We talked a little bit of the difference between ownership of, membership here versus stock ownership there, but we're very limited to the types of things that we can invest in. So, we don't have investments in derivatives and credit default swaps and all that kind of crazy stuff. The number one thing that I would say is that we are very financially sound because we don't have risky investments. And so I think the last financial crisis that came about a lot of risky investments.
Okay. Okay. So I just want to make sure I understand the kind of bottom line to
Well,
the
I,
what the question I asked.
um, talking about the financial institutions, if I could change something, I guess it would be that the financial institutions are more sound.
Mm.
Okay, now I'm gonna really kind of put myself out there a little bit, but I think they did a lot of those things because of greed.
Hmm.
So if
Yeah.
I could
I
change
would
anything, I would make it where they are not investing in speculative types of investments, especially, your financial institutions should be financially sound. And, I hear some of the things that are out there, and there's a lot of speculation out there.
yeah.
You know,
Yeah.
if if you knew that your investment firm was investing in junk bonds, you might be thinking twice about where you're putting your money. And there was a lot of bad stuff that happened in the 80s, and then with the financial crisis, some of the questionable practices that some financial institutions look at. And at the end of the day, everybody is looking to bring in revenues for their organizations. But I guess I would really kind of make it more fair for people versus some of the speculative things. And I'm probably putting a target on my back on that one, but that's just me.
So I think, like, from what I'm understanding from that is for a financial institution to be what you said sound, you think there should be a little bit more transparency so there isn't as much like speculation.
Yeah,
Yeah.
definitely. I mean, that's one of the good things that I feel we have in the credit union space is we're very financially sound in regards to where our investments are.
Yeah. Okay. That makes sense. So on if you're thinking about kind of more on the consumer front, like your members or just like, people of the general public, do you think is like the biggest myth about money that you think everybody should just unlearn?
Biggest myth. Wow, that's a good question. Probably one of the things that people don't understand is thinking about inflation, when they're looking at their finances. You can just look at whatever a candy bar cost when you were little, compared to what a candy bar costs now. You know that, prices go up over time. And a lot of times other things don't go up, comparatively. Just saw a post within the last day or two where somebody was posting about living with their grandpa and their grandpa being in a much better situation than they were because I think over the last several decades, prices have gone up a lot more as compared to, say, wages, where before, a single income used to, take care of a house and a car and a family. And, that's not the case today. So probably the myth would be the inflation factor that a lot of people don't take into consideration. So when they're mapping their financial futures out, they need to realize, hey, however much money it takes today, it's going to be different, 30, 40 years from now when you go to retire.
Yeah, I would definitely agree with that. I think the myth there is that, like thinking about myself personally, I've noticed that that's kind of an underlying narrative that I need to check in myself is that like I should be where my parents were at my age. And I think that's something that people just kind of assume. But then when you actually educate yourself a little bit and you start learning about like how, the cost of living has increased over the last 30 years compared to how the average wage has increased. I actually saw a chart recently where they showed like the kind of line graph of like how the average wage in North America has increased compared to the average home price. And it's just astronomically different. And then you
Yeah,
wonder why people, can't afford to buy a home at the age their parents did. So I think that's the myth that we kind of have to bust there, is that like you should judge your financial situation based on where the previous generation was at your age.
right.
Yeah.
You can't really, and sometimes older people will judge younger people based on that same false narrative because they're looking at them from a different perspective and things aren't the same. Relatively speaking, you got more for your money back then. Things cost a lot more compared to wages than they did back then. And the elephant in the room would be the cost of education. When you look at like what it cost my kids to go to college compared to what it cost me when I went to college. It's a huge disparity, and I don't have the answer for that one. I don't pretend to know, but I know that the prices have gone up, you know, significantly. When you were talking about a chart comparing wages to like costs of homes, education is probably even worse than that.
Yeah. Yeah. I mean, we could go on a whole other tangent talking about the cost of post-secondary, but I feel like we'll just go down a
Yeah,
rabbit hole if I get
yeah.
to talking about that one.
We would just be almost spinning our wheels. But yeah, it is definitely something that younger people, unfortunately, are faced with today. Which, um,
Yeah. Yeah.
which actually that brings up something that we put together in place a student loan portal. So
Okay.
very similar to some of the portals out there that might work like in the mortgage industry. Apply one time and get like four different quotes for home loans. Just because of the high cost of education, we actually have a student loan portal on our site that um, they can put in their information, and it doesn't do a hard pull on their credit, so it's not going to negatively impact their credit score, to come back and give them multiple quotes for different types of student loans that would be available either for new student loans or refinancing, just to kind of put a little feather out in our cap for things that we're looking to be of added benefit and service for our member.
Yeah, and I mean, you can't really talk about, consumer debt without talking about student loans, and I mean, I know that the United States has, I think it's like something like $1 trillion in student loan debt or something like that. I don't know
Yeah,
what it is in Canada, but I know, having gotten 2 degrees, I was always very surprised how quick even like the government was to send me loans. When I would apply for grants, I would apply for scholarships, and I would always get loans just kind of offered to me, and I never wanted them. I was like, I would like to pay for this myself without using debt if I can. But it never ceases to surprise me how many people I speak to from the States on a weekly basis on sales calls, coaching calls, and I will hear people say things to me that really kind of just scare me, because I think there is a bit of a pressure, I think, for a young person to go to post secondary after they graduate high school. I think that was the case when I graduated, and I think it's still the case today. And I think because there's so much student loan debt out there, I think that this might be a bit of a side tangent, but I think pressuring a young person to go to post secondary right away when they don't really know what they want to do. Some do, of course, but I think if somebody isn't sure what career path they want, to kind of tell them that they should go to post secondary and then take on these student loans, it kind of boggles my mind a little bit, because I've spoken to so many people who are in their 30s, 40s, even 50s, and they're still paying off student loan debt just because they took on that debt, I guess, at a time in their life when they maybe didn't think about, okay, how long is it going to take me to pay this off? What is the interest rate on this? And maybe they didn't have access to the kind of tools that you guys are putting out there now. So I think that is a really important topic when we're talking
oh yeah.
about consumer debt.
Yeah, that's like you said earlier on the education side being a rabbit hole. But yeah, I've talked with, I've got two kids, so I've talked with them and their friends, and some of them know exactly what they want to do, and some of them don't. And quite frankly, there are areas that they can go into without having to do post-secondary degree. I mean, there's a lot of good paying jobs with electricians. There's journeyman types of programs, HVAC, people that do that type of work. And even those businesses, some of those businesses, you being an entrepreneur, I think as the population gets older, a lot of those types of businesses you're going to have available for a entrepreneurially minded younger person to be able to come in and get their experience and take over profitable businesses that they didn't really need to get a college degree to run a HVAC company or an electrician type of business.
Mm.
And sometimes it's a little bit to ask for younger people to know what they're going to do for the rest of their life. Because sometimes people's careers change.
Yeah. Yeah, definitely. I mean, that's not to say there's not validity in going to post secondary. There's obviously a lot of career paths that require some kind of degree. But I think you brought up a good point there that it is worth, like, if somebody's 18 and they're like, yes, I do want to go to school for something and I don't have the money to pay for it and I am going to need to take on student loans. I think it's worth educating yourself about, like, okay, how does this loan work? Like, how long do I have of interest free? What is the interest after that period ends? And
When's
I
the
think a
interest
lot
kick
of
in? When do the payments kick in? All that kind of stuff. Yeah,
Exactly.
definitely.
And I think a lot of
Yeah.
18-year-olds are probably too afraid to ask those questions, or they might not even know that they can
They
ask those
might not even
questions.
know that they should be asking those questions.
Exactly.
Yeah, I'm definitely a strong proponent for education. Whether that's colleges and universities or different types of online education, regardless of what type of education it is. I mean, we all become better by being educated. So I wasn't steering anyone away from it. Just there are some people that college isn't for them, or some careers that don't require college.
Yeah. Yeah, exactly. I think it's
But
like you said, it comes back to asking questions.
yeah, but as far as education goes, we all benefit from education. I think Alex Hormozy is one that has brought up some examples of people that have worked for him, learning sales and different types of coaching programs that have benefited people in all different areas.
Mhm. Yeah, yeah, for sure. So one of the other things that I wanted to talk to you about was, like, I noticed when you kind of sent me over some info about you've contributed to a book that was all about leadership. And I mean, being the president and CEO of a company with over, I think you guys are at 6,700 plus members now, you obviously have to take on a little bit of a leadership role. So, what would you say is the biggest leadership lesson that you learned the hard way?
Probably early on in my career, I would say how you talk with people. I shared with you I was active duty in the United States Marine Corps. And so early on in my career, I might have had a little bit way of talking to people from that mentality. I remember a guy that worked for me at the time. He's like, this isn't the Marines. You shouldn't talk to people that way. And it kind of it was early enough in my career that it did open my eyes and get me to change. So if you've seen any of my leadership posts, in the last couple of decades, I from time to time do discuss, it's not what you say to people, but it's how you say it. Now, clearly in the Marine Corps, they're going to tell you what to do and when to do it, and you better do it now, type of thing. Out in the real world, it's a little bit different. And we're dealing with all different types of people and in communication specifically, even like with you and I talking, there's what you said, there's what I said, there's what you thought you said and what I thought you said, and they might not be the exact same type of thing. So communication is really big in leadership and not just what you say, but how you say it.
Yeah, I could see that being a pretty big jump, going from a military kind of environment to then working as the CEO of a credit union. Very different environments.
Probably besides communication and how you say things, the second part for leadership and in any walk of life, would be empathy. Because a lot of times we might be critical of another person and not realizing, the shoes that they're walking in. We all have a certain type of lens, if you will, in how we see the world, and we don't all see it the same way. So leadership in any capacity, in any type of organization is to have some empathy in how another person might be looking at things, because I might be looking at something completely different than how you look at it. And it's not right or wrong. It just is how we just happen to interpret something. But from a leadership standpoint, is to, try to walk in that other person's shoes to have an idea of what they might be going through as well.
Yeah, I think it's a leadership thing, it's a business thing, it's just kind of a life thing because learning those good communication skills and learning how to be open to other people's perspectives is, in my opinion, I think it gets you farther in every walk of life because like you said, everybody has kind of grown up with their perception of life. Everybody's looking at life through their lens and whether it's in the office or, in the military or what have you, if people aren't agreeing on something, it's very likely that they're just seeing it from a different way. So if you can
Exactly.
learn how to, empathize with the way somebody's seeing something, it's like that saying, it's you versus the problem, not you versus me kind of thing.
Yeah, and so when you're talking with other people, I might ask some of my senior staff members, if we're not agreeing on something, it's like, okay, so let me understand how you're looking at this, because they might be looking at it from a complete different viewpoint than what I was thinking.
Yeah. Yeah, absolutely. So one of the questions that I wanted to ask you because I think that in the field that you're in where you are like working with people to help them get things like, equipment for their businesses or a mortgage for their house, like I think in this financial field you are like really really impacting people's lives. Can you think of is there a story that comes to mind, anonymous of course, that, maybe of a member at the credit union or something that kind of reminds you of why you think this work matters?
What was the last part? Why I think what matters?
Why you think this work matters?
Oh, well, we now for a lot of people that could probably walk in and get a particular type of charge card or car loan to any bank or credit union out there. There's many people, based on their circumstances, to them, the biggest thing is the interest rate. But there are literally some people that, lives are completely changed, because they couldn't afford to buy a car. And let's say their regular institution that they banked at, would not give them a loan. And I've seen people that have been able to come in here, and instead of just being turned down, which happens a lot of like online types of things, but if we've got a member that comes in here and they have a certain situation going on, instead of just turning them down, our staff are talking with them and asking them questions like, well, maybe you can get a parent to co-sign for you, or maybe it was just a difference between putting a little bit of money down on the vehicle because they wanted to, buy a vehicle and get 100% financing on the vehicle, but maybe because of their situation, they needed to have a little bit of down payment. So whether it's with a co-signer or down payment, instead of just getting a turn down, coming in here talking with our staff, they can see exactly where that member's at, what's going on with them, and coming up with a way on how they might be able to structure that. So instead of getting a no, they're getting a yes. And, for a person that's, there's a lot of people that are kind of hurting out there. There's a lot of people paycheck to paycheck. Quite frankly, if their furnace or their hot water tank were to go out, that's when it really gets hairy for some people. And their car breaks down and the engine's blown, and it's almost as expensive to fix the car as it is to go buy not a new car but another used vehicle. By having to walk or ride or ask for somebody to come pick them up, their lives are completely changed when we're able to help them.
Yeah. Yeah, I believe that. When it comes to loans and it's like personal loans, mortgages, small business loans, I mean, it could literally make the difference between somebody moving forward in life in the way they want to versus not being able to at all.
Unfortunately, yes, there's some people that could just be financially devastated if we weren't able to help.
Yeah. Yeah. Wow. Okay. Well, my final question for you is the question that I always like to ask everybody at the end. If you could give a piece of advice to people out there who feel like inspired idiots in that they are trying to build their unrealistic life and they don't really know what they're doing, but they're figuring it out. What piece of advice do you think that you would give to those people?
The number one question, if you asked my daughter, literally, and you may end up talking to her once, do this. If you ever talk with her, because I know we were talking about podcasts and different things, but if you talk with my daughter, just say, what's the number one thing your dad said? And she'll tell you, take the shot. So whatever it is in life, we're only here for, a certain period of time, you might as well take your shot, whatever that is that you're wanting to do. I know you have a few things that you do online, whether it's looking for your next business, venture, investment, career, new job, whatever it is, you're the only one that can do it. You need to go out there and take your shot.
Perfect. That's a good note to end it on. I'm going to go ahead and stop the recording, but thank you again, Greg, for hopping on. This was really cool.
Well, thank you.